Hello everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets on Wednesday the 10th of September. The European markets have started fairly negatively, and that's taken the steer off Wall Street, which actually had the S&P 500 closing down at a two-week low back at 1988, so decisively back below that 2000 level. And there was a fairly negative reaction to Apple's products. Certainly, if you go by the share price of Apple yesterday, obviously they had this big announcement: new iWatch or Apple Watch, the new Apple Pay system, and also the new iPhone 6. But the shares were fairly volatile, but closed lower on the day, and that certainly has, with bearing in mind that they're about 4% of the S&P 500, that had a drag on the index, and that seems to have sort of added to the malaise that the Wall Street markets have been in for the last couple of weeks, moving fairly sort of drifting in a sideways motion, but now sort of starting to fall away. European markets have taken that on board. Asian markets have taken that on board as well, and sort of starting to see a bit of a decline in these stock markets. Currencies, though, fairly mixed actually, and that is not really taken on board. What the part of, again, also the decline that we saw on the markets yesterday was due to a report by the San Francisco Fed that suggested that perhaps markets were a little bit dovish in terms of their expectations on Fed rate hikes, and that apparently gave a little bit of downside impetus to the markets as well, but not really seen that on the dollar yet, which should theoretically trigger to a higher dollar. But the dollar has been on such a strong run in the last few weeks that it still has had this big run higher, and you can see this 84.58 key high, and that's the July 2013 high. I've got quite a long-term chart here just to show where it could go on a breakout, but certainly on what we're seeing at the moment is just a slight consolidation in the dollar index, nothing too major in terms of moves today, but that is what we're seeing in the Forex markets. Indices, however, certainly the in terms of volatility of the S&P options, slightly picking up again, and that I think is interesting in itself. The fact that we're starting to see a bit of a correction in the markets and volatility in terms of in terms of portfolio protection seems to be increasing. So that is something that we need to keep an eye on, I think, going forward. Now, in terms of what we're looking at for today, the Bank of England inflation report hearings are at 2:45 UK time. That is where Mark Carney just sits before the Treasury Select Committee and just basically explains the Bank of England's decision and their forecasts, etc. So the market will be very interested in that, and certainly cable at the moment is found a little bit of support overnight and starting to pick up a little bit. So that's something that I'm going to focus on a little bit further in my sterling dollar chat in a bit. But that's largely speaking the only real bit of data we've got out today. You've got a Reserve Bank of New Zealand monetary policy update at 10 o'clock this evening, obviously after all the markets close, or stock markets anyway. So that's going to be more focused, I think, on dollar Kiwi overnight tonight. So 3.5% expected there, and that's a no change on rates. Now, in terms of my chart of the day, the Aussie dollar had a big breakdown yesterday. Closed bang on that key support at 92 big figure, but today we've had a significant breakdown, but that is 3 days in a row now of huge declines. That US dollar is really strengthening now against the Aussie, and that certainly wasn't helped overnight by a disappointing consumer confidence figure that came out, which showed a little bit of a decline in that consumer confidence in Australia, but certainly that 92 big figure mark has now been blown away. Looks like we're going to get a close below that, which would certainly confirm the breakdown of that key support. Now, on pure technicals, you'd say that is a top area now, and you'd measure it from top to bottom and then project it downwards, which would give you a target of 89 big figure for that breakdown, which actually coincides with that support of that March low around there. So that would be where the test would come back to. Initial support on this move, again, you're probably around about that 91 big figure in terms of where that support starts coming. 91.30 is where it begins to come in, but you'd say that around that, just around that 90.80 towards 91 is probably around where that's the real support begins to sort of come back, and certainly the momentum indicators are now suggesting that this is a confirmed move. The RSI through the sideways range that we had for 6 months, actually, RSI never really got below 38, but now you've had a decisive move to the downside. That RSI is currently at 31.5, so I think it's now is confirming this breakdown, and that we're going to see further weakness. That 92 big figure point now becomes the resistance, because old support becomes new resistance. And I'll show you here on this chart, on the intraday chart, where that old support came in, and we're now looking out for any sort of possible rebound territory. You'd probably be talking about that 92.17.18 mark, but also 92.45 as well. And it looks like it certainly is going with the downside break, so you may not even get a pullback of any note. So any sort of real pullback, I think you're going to be starting to look for as a selling opportunity. So I wish you good luck in your trading on Aussie dollar today, and I will speak to you later. Thank you.